up, YouTube? In today's video, I got a quick lesson as well as a message on how you guys can profit as well as benefit from a stock market crash. So as always, please keep it locked. Please make sure to like, subscribe, help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. Now really quick, guys, class will be in session, so I'm about to pop out the charts in just a second. But before doing that, okay, you must understand market conditions. All right, today I'm going to walk you through why the bull trap is something that you are going to have to navigate for the foreseeable future until we break certain levels. Okay, so you're going to get moves up. However, they will be short-lived, they will be faded, and ultimately come back down until that is no longer the case, until certain levels are recaptured to the upside so we can start moving higher again. So what that essentially means for you is that temporarily you are going to have to either be in and out on moves to the upside, because they will still be there, okay, but ultimately in totality the play will be coming down. Let me know if that's understood. Let me know if I broke that down simple enough for you guys. Okay, on top of that, you had to put your investor hat on. Okay, so right now you're getting some of the best stocks that you guys know, like, and love for cheap. They are on sale. Okay, when there's blood in the streets, it's time to eat. So on your investor side, stocks that you want to hold long term, 1 to 3 years up to 10 years, you should be looking for buying opportunities in those. From the trading side, you have to demonstrate a little more patience and or flexibility. Patience meaning if you have a call, okay, so I have an Nvidia call for 2026 that has made money, but in this particular moment that Nvidia call is down. However, we have a Nvidia put for 6 months to the downside that helps capture some of that, so that once the downside is done, you take that profit from the downside, you place it in your call, and then you lower your average cost to help it out a little bit when we start making our move back to the upside. Everything is strategic and about having a strategy and a game plan. It's also about still managing your risk. You shouldn't be going down significantly in any play, no matter how far you guys go out in terms of time, because you still have to manage it, have a stop loss, possibly reposition yourself, then go with that play, or decide to make money in the opposite direction, or stay away from it altogether. In today's video, guys, we are going to be breaking down some things I want you to see in the chart that is going to help you get to the money. Okay, guys, this is the SPY on the 15-minute time frame, and we currently is sitting at 575.07. okay, the bull trap is so significant and prevalent because you're going to constantly get this move right, let me see here. Okay, you're going to have a chance for this to go up here, but if the SPY can't get above 583, let's just call it 584. If you can't get above 584, it is going to hit resistance. Okay, let's just call that resistance. Okay, it's going to hit resistance, boom, suck you guys in, maybe wick above it, but ultimately come all the way back down here. And that's where you guys are getting crushed at, knowing that the call has to be here, from here to here. Okay, then you have to switch to a put. So the call is short, you have to switch to a put when you see the resistance, the stock is no longer going higher, for that big move right there to the downside. Okay, that's one way they try to get you guys. Okay, let's clean this up, because you need to see this, because they also do this. This is what throws you guys off too. They'll gap it down here. So we're here currently. Okay, This is where we're currently at. They will gap it down to here, and then it'll come up the whole day. So you think you're having an up day, only for them to really be setting resistance right here at 575-ish. And then boom, it hits it, makes that same move, and then comes down here and they breaks this low right here. They break this low on that move. That's the equal low. We're gonna put low in there, boom, and then go down even further. And then before you know it, you were in a call, you're not listening, you're not being flexible, you're not being nimble, you're not using a stop loss, and then these plays are managing to get you. Okay, another way they're getting you with the bull trap is, let me know if you guys see this downtrend. Down, lower, high, lower, high. So strategically, if they can't even get up here to this zone, if they can't get up here, they're going to come down to make sure the next move they make is here, so that you have another lower high, knowing that's signaling. Look at this. All of this is signaling a channel that's taking us to the downside. Okay, this is a bull trap in its many forms, but you guys have to know that the move will go up. There's all these chances. It's an up move here, there's an up move potential there. You have this up move, this up move, this up move, this up move. There'll be up moves. All of it is intended to trap you and come right back down. Okay, listen guys, I hope that was helpful. I wanted to make sure that I pointed that out to you guys and help you see and illustrate for you what are you going to be faced with. It's not a bad thing. You just need to know, for this particular moment in time, this is the season you're in. Let me know if that's understood. So a lot of people run from the market right now. A lot of people give up. I'm down, I'm losing. Nobody cares about that. The market is going to come all the way back from this. You have to just let this run its course. And with the new administration, with tariffs, with all the noise that's out there, the market is playing on that to let some of the steam out of some of the stocks that may have ran too fast, too far. But now they're just using all of this as a reason to bring it down. You have to be strategic. This is when you guys are going to say, those that stick around, man, I'm glad I didn't give up, because I changed my life. I was able to get all of these stocks when they were 10% lower, 40% lower, 30% lower. And then boom, when they took off and went up 200%, all is well. 300%, all is well. That's what's coming. But we don't know if that's 3 months from now, 6 months from now, 12 months from now. That's the part that weighs on the human psychology. Okay. The other thing is dollar cost averaging into your long-term assets, making sure that you are, I'll always say as a rule of thumb, every 5% from the high, 10% from the high, 20% from the high, you could be buying lower, lower, and lower. Okay. And when you do that, you're accumulating more shares, but you're also bringing your average cost down. Okay. All of those moves are best, especially once the market recovers. Okay. But you will be in this bull trap season until we recapture 590, 614. You got numbers that's way above that you must recapture in order to stop the downward trend, the consistent bull traps you're going to see. So what that essentially means is that your other plays will also struggle to go higher or go as high as they could go if the broader market was joining it and supporting it and coming along for the ride. Because that's not the case, you need to make the adjustment. Now, other adjustments you can make, you can buy puts. Okay, you can buy puts once the stock go up. All pops will be faded. So once it go up, you can buy a put versus getting tricked, knowing it's going to come down. Okay, that's first and foremost. Number two, you can be in cash. You can sit out with cash ready to deploy on the sidelines. You're not sitting out in a, I'm pouting and I'm running the Victim Olympics. Not that kind of sit out, but like, you know what? I'm going to sit back. I made a lot of money. I'm going to sit back. I'm going to get my cash ready to deploy because I got my eye on this particular stock when it comes to this low price. Everybody and their mama in the world that know about money and in stock market knows it's going to go back up at some point in time, whether 3 months, 6 months, 9 months, or 12 months from now. But I have an eye on a certain stock that I'm going to hope and pray it comes down to a lower price. I got my money ready. I got my taxes. I got a bonus on my job. I got a new job. I got 2 jobs. I've been working overtime, whatever the case may be. I sold some of my winners. My stop loss stopped me out of some of my plays. And now I have this money so I can buy low of something that has really went on discount and on sale due to this sell-off that I'm going to take advantage of to make even more money when it returns back to the upside. Okay, that's the second way you can go about this. And then the final way you can go about this, guys, is simply dollar cost averaging. So you got puts, you have cash, and you can dollar cost average. Some of us investors, we're always in the market, like, because you can't time it. So you just hold your plays. You deal with the temporary pain, but as stocks go down, you buy a couple here. You just keep bringing your average cost down. So now before you know it, by the time this crash is over, you have 100 shares or something just because you just kept being consistent. You kept being consistent, and then that eventual turnaround happened. You let it ride. And again, 3 months, 6 months, 9 months, 12 months from now, boom, you made more money than you ever could have imagined just because you finally, for the first time, stayed disciplined, didn't quit, didn't give up. Okay, so listen, guys, this time can be rewarding depending on how you choose to go about it. Okay, if you are unwilling to be flexible and nimble and take what the market give you and make money in both directions, then it can be tough. But it's tough is a mindset, and that's all contingent on how you look at it. But everything else, guys, you got decisions to make. Remember, you the CEO of your portfolio. You should always be using your stop loss. You should always be managing your risk, regardless if this is too much to handle. Many of you have done phenomenal. I'm just putting this out there for somebody that might need this message today, though. With that being said, guys, get ready to eat this week. We're going to have a phenomenal week on our end, making money in both directions. So the cause, if you join the money team, for example, or if you're in the Discord, the cause may be short-lived just because of what I just taught you today. Okay, so that don't mean you can't make money on calls. You just need to be strategic when you get in. And then you can't overstay your welcome because they're going to fade. Fade means sell all of them when you get in them. The puts, however, if you guys embrace it, if you guys are patient and you let the stock go up, either after you bought a call or just let it run up, hit resistance, and then buy a put and come down, you are going to see massive success. So again, be ready to make money in both directions. The direction right now is heavier to the downside, temporary to the upside. Still able to do both directions. You just need to come with that mindset. Okay, with that being said, guys, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.